We're joined now by Angus Taylor, the Liberal member for Hume in New South Wales. Good morning.
Good morning, Chris.
Now, the CPA Australia is models making changes to the GST, could earn up to an extra $43 billion for the government, which they say would allow the states to get rid of a whole lot of rather unsavoury taxes, if I put it like that, stamp duties, etc. What's not to like?
Well, what's not to like is Australians have to pay more tax. I mean, it's very easy to talk in a vacuum about raising taxes, but of course Australians don't want to pay more tax, and nor should they want to pay more tax. I mean, they rightly start by saying, well, can government use the current money it's got better? It's only as a default, as a last resort, that they will ever want to accept rising taxes. So, you know, we've got to start with that in mind. We've also got to remember, very practically, from the point of view of the GST, we can only get changes through with the consensus of the states. It is a state tax, and just constitutionally that's necessary. So it's not as easy as just doing a few numbers. But Chris, I'd just say, take a step back from all of this. You know, the place to start is by asking yourself, how much money are we going to need over the next 20 or 30 years? You know, that's where we should really start. And how do we deliver better government services with the money we have? Can we do that? And as I say, only as an absolute last default, if you like, should we ever move to raising taxes.
Well, but you've just almost floated that idea there by saying how much money do we need over the coming years? If the answer is government needs more money, should that be on the table?
Well, we see it's not. Let's talk about that, because that's very, very important. So, you know, the last intergenerational report, 2010, and the Parliamentary Budget Office, and I'm sure the next intergenerational report, which will come out very soon, told us that the combination of health, aged care, welfare increases, some education increases, will increase government expenditure absent intervention by about 5% of GDP. So in today's dollars, that would mean, to fund that would mean more than doubling the GST, or a 50% increase in personal income tax rates. And they're massive increases. Of course, the alternative, the fundamental alternative, is to say, well, look, how do we drive better productivity in the way we spend our money, more innovation, being smarter in the way we spend our money in health and welfare and education and aged care? And of course, what really matters is how much productivity, how much innovation can we get in those areas so we don't have to raise taxes. And, for me, it's the first discussion to have. Where do we drive innovation in health? How do we drive innovation in education so we don't need so much money? Australians want us to have that discussion, and we should have it.
Do you think that that's actually possible, to retain taxation at current levels as a percentage of GDP and still deliver all the services that people want? Or is it really a choice, either bigger tax take or less services?
What it comes down to is a very simple question, which is how much productivity can we get in the delivery of government services? If we can get productivity gains in government services along the lines of what we've achieved in the private sector in the last 20 or 30 years, I think we've got a good shot. We've got a good shot at containing tax and avoiding tax increases.
Okay.
If on the other hand we can't get innovation and productivity gains in how we deliver government services, it's very clear we're going to have monumental tax increases, huge tax increases. And not once, Chris, we'll be raising the GST every year from now until 2050. So the fundamental question here is, how do we deliver innovation, smarter government services?
So the CPA, if you like, then, I don't want to verbal you, but they're taking the easy way out, because they're saying, OK, we can raise all this money, we can give offsets for things like stamp duty and income tax and company tax, but also we can help lower income earners by giving them more through the welfare system. In other words, a bigger tax take and a bigger size of government. Do you think there's creeping socialism in the CPA?
Well, I don't want to verbal the CPA because I haven't read the report. I've only had time to see the news reports so far, so I don't know exactly what they're proposing. And if they're proposing some change in the tax mix is worth consideration, well, look, that's a very good point to make. The more fundamental point, though, is whether, as you say, just raising the tax take is an easy way out. Well, it is an easy way out in terms of avoiding productivity gains, innovation, smarter government services. But I tell you what, Chris, it's not an easy way out in terms of what the Australian people want, because Australians don't want to pay higher tax. That's very clear. You know, I'm out on the street all the time. They don't want to pay higher tax.
OK, the Financial Review today has canvassed the views of 5 economists about where the government can make changes to help restore the budget. And all 5 of them nominate superannuation, addressing the very generous concessions, tax concessions that are granted particularly to high income earners. Is this an area that really does need to be on the table and addressed by government?
Well, the first point I would make is, you know, we're having a discussion about how much tax we need to impose on the Australian people before we've had a discussion about how much productivity and innovation we can get in government services. But putting that aside for one moment, which I think is the most important debate of all, look, it is true that we need to look at the fairness of our tax system and the efficiency of our tax system, and that's exactly what the tax reform process, which is underway now, is doing. And you know, fairness has there's many different measures of fairness, and we have to look at those. There's no doubt about that, and I think these are good debates to have. But as I say, we should always come back to the most fundamental question of all, which is how much tax do we really need to impose on the Australian people? And then let's get our tax mix right, let's make it efficient, and let's make it fair.
So if we're trying to make it fair, and the opinion polls show that there's a widespread perception of last year's budget that it wasn't fair, having superannuation concessions on the table, if the government was to get rid of some of those concessions, then it would be able to give tax relief in other areas, wouldn't it?
Oh, well, it may, but you know, no tax system is ever perfectly fair. That's the truth. You can't completely. Yeah, tax is an inefficient thing to do, and it hurts someone somewhere, and inevitably that will have an impact on either a very hard-working Australian who is being taxed for some of their hard work, or you know, in some cases, those on lower incomes will end up paying tax. You know, so there's no perfect tax system, but you know, the most important point I would make about fairness, is leaving a huge debt to the next generation, or failing to do the work to deliver smart government services efficiently, which will result in higher taxes for Australians in the future, is the most unfair thing of all we can do. Now, every Australian has a very good sense that they don't want to be unfair to their children. And this is the starting point for fairness. Let's get our thinking right about government expenditure, particularly in those big government expenditure items like health and welfare and education.
Well, you referred there to people, hard-working people paying tax. A couple of these economists nominated revisiting the 50% tax concession on capital gains. People who work hard get taxed a certain amount. People who simply invest pay half as much tax. That seems, on the face of it, to be quite unfair. If fairness is one of the things that the government is considering, is that an area that you think should be revisited?
Well, it's very easy to be glib in this area, Chris. It's very easy to be glib in this area. There was a rationale for that 50% break on capital gains, and it's that it's taking into account the inflationary effect of capital gains. So, you know, if I invest in an asset and a big part of the nominal capital gain, you know, the house goes up in value from $500,000 to $600,000 because of inflation. I'm no wealthier, but if you have a full capital gains tax, I've paid full capital gains tax on that $100,000 gain. Now, that's unfair because I'm no wealthier. It's just inflation has driven up the price of the house, natural inflation. So, you know, you've got to really if you want to be fair in a tax system, you've got to get into the detail and you have to really think hard about these things rather than make glib statements that, oh, well, wealthy people are doing terrifically well.
But your average person with, say, a term deposit is getting taxed year in and year out on the interest, where capital gains isn't calculated until the investment is realised. So that's already an advantage to that sort of investment.
Well, and you know, the Henry Tax Review made a very good point, which, you know, I'm sure will come up in the tax reform process that we're undergoing now, which is that there is a real disadvantage in those who invest in term deposits at the moment. There's no question that's right. And there were some suggestions made in the Henry Tax Review about how to fix that. You know, we have to do this in a way which is not going to undermine government revenues, of course. But you know, that's a very, very good point, and we should give it due consideration.
Now, the Social Services Minister, Scott Morrison, has ruled out including the family home in the asset test for the pensions, but he has opened up a discussion about how it might be possible for elderly Australians to sell the family home, realise some of the profits, downsize, but not get tripped up by the asset test.
Yeah.
Is this an area worth exploring, and what are your ideas? How might it be made to work?
Well, the starting point, as someone, you know, who was brought up on the back of a family farm, you know, is that if you're asking people to live off an asset which is not delivering much cash, that's pretty, or it's not delivering any cash, that can be pretty unfair on them because it's forcing them out of their family home, and that is why Scott Morrison, I think, has made those comments, and I support that. But, you know, the broader discussion about are there clever ways of actually dealing with this problem, I think that's again, worthy of consideration. I would still come back to this fundamental point, though. Let's not turn this into an opportunity for those who want creeping socialism, as you described it, to just continually push up tax rates, because that is abdicating the responsibility of good government, which is to deliver government services as cheaply and as effectively as possible.
Well, just a final question. Is our tax take, the size of government, about right, or would you like to, in fact, see it smaller?
It comes down to whether we want to innovate in the way we deliver health and welfare and education. If we are prepared to innovate and find productivity gains of a couple of % a year, you know, on an ongoing basis, then I think our tax take is completely sustainable. If, on the other hand, you know, the public sector union officials can continue to make it very difficult to drive innovation in this area and others, you know, then it's going to be very difficult to avoid anything other than to impose taxes on Australians. Now, in all likelihood, those taxes will be imposed much more on future generations than us. And, you know, I think that's grossly unfair. So it really comes down to this point. How much are we prepared to drive innovation and productivity in health, in welfare and education?
Okay, Angus Taylor, thanks for your time today.
Pleasure, Chris.